Dan, so you and I were just chatting about mindset. So why don't you just talk about, because we were talking about fatherhood and parenthood. I just got back from Disney, and there's a lot that goes with that. But I really appreciated how you were talking about the mindset, and I think about fatherhood, parenthood, and or running a business. And it's kind of, and we talk about our business is our baby. So what better place to start? So tell us how you like to think about hard things.
Mm. Well, so as we started to talk about a moment ago, so much crossover between fatherhood and leadership. And this is a whole, I mean, this could be a whole several podcast
Hmm.
episode series in and of itself. But this only really came to light for me in the past 2.5 years since I've had kids. And what we were talking about is the idea that, the first, so I have a 2.5-year-old and a 6-month-old. We are in it, as they say.
Yes, for sure.
And it's like, if you ask me right now, hey, like, how's it been? It's been pretty tough. It's been amazing. It's been beautiful. It's been a blessing. It's been challenging. It's been all the things, as the kids say. But what I appreciated about our conversation is this idea that mindset is the difference maker between, in the context of fatherhood, the first 2.5 years of being a father being a total drag and frustrating and dominated with frustration and challenges, or being something that you can sort of ladder up from and really appreciate. And
Context.
it's not easy in the moment, every moment of every day, to see the meta perspective and realize how much of a gift it is, realize how much I'm going to look back when I'm 80 years old, sitting on the rocking chair on the front porch, and look back and with great appreciation for these
It's
arguably
context, man,
challenging years.
and that's what I love, Dan, is like, because it it is, there's so much similarity to that, and then running a company where you're just, it's hard, but then there's a lot of joy in it. And like what I was about to say before which is why I wanted to just hit record, is
Yeah.
it's about the journey, man. And like it's taken me a long time, Dan, to figure that out, where it's like the journey is the point. So like you
Yes.
can't have a perfect journey, so therefore it's the ups and downs that bring relativity to it in order to make it actually worth it. And I think about business, and like how many times, and like, I stumbled across you on social media and a bunch of the common connections that we have. So many times people put just the perfect pictures out there, right? Like, and I think about parenthood, it's the same thing. It's like people put up, like, they post everything at Disney that, or like, or their holidays. And I'm like, yeah, but there was bloody murder screaming that happened right before that picture. And then
Yeah,
on,
exactly.
on social media, we post all the, upsides about business, owning companies, buying companies, buy them, let it run passively, and everything will work out great. And it's like we're missing so much of the picture, man. So like I think that is just a great container to start this conversation, because you have a unique take on private equity, like from what I've gathered, as far as like it's not just about set it, forget it and financial engineering. It's a lot of value creation, which resonates exactly with what I'm talking about all day
Right.
long. And so why don't you just give us a little bit of a background, man? Like how did you get to that point?
Sure. Yeah. So I'm a product of a Midwestern upbringing. I was the son of am the son of two awesome parents who were in the healthcare profession. My father was a product engineer at a medical device company. My mother was a nurse, a 42-year nurse at Cincinnati Children's. And so I thought I was going to be in medicine. I was sort of
You say
destined to be
Cincinnati
in some.
Children's?
That's right.
Oh,
Yeah.
nice. You're right in the backyard of my business partner. He's in Cincy too.
Oh,
He
is that
like he
right?
bleeds Ohio State, man. Like it literally ruins his weekend when they don't win.
I'll try not to let that get in the way of my views towards your business partner, his OSU allegiance. Sorry for any LSU listeners out there, but there's this weird dynamic in the state of Ohio where if you're from Cincinnati, OSU is a very polarizing topic around these parts.
I'm aware.
Yeah. But long story short, so I was sort of destined to do something in healthcare or medicine. So went to school sort of undecided, but veering in that direction. And it wasn't until I learned how incredibly queasy I get at the sight of blood and broken bones that I decided to take sort of a hard left and get into something that was as far away from that world as possible. So I stumbled my way into finance in undergrad, and to make a long kind of early chapter of the career short, landed my first private equity job in 2007 through, and I say this not as a throwaway comment, but sincerely through just some dumb luck and right place at the right time. And
Well, I just think, how did you stumble into finance? Even just to kind of pull that thread just a little bit before we get into the rest, because like I stumbled into it like the way wrong way, like going through all the hard stuff, then realizing that finance is kind of the name of the game the hard way. But like, was it like something about the topic that you liked, and then how did you get into private equity versus like the traditional accounting route?
A boss of mine. So I had an early career experience. This is when I was in undergrad. So I was in a sort of an operations management, managing warehouse and a logistics and supply chain organization for a small privately held company here in Cincinnati. Great early indoctrination into leadership, great early experiences, and lots of mistakes along the way when it comes to just managing people. The boss of my boss at the time was not a finance guy by background, but it's just one of those very intellectually interested and interesting people, very curious. And he's a mid-level manager at this company, and God love this guy. He was always so keen to spend time in my office, just asking me about how I was doing, asking me about my family, asking me about where I wanted to go with my career. And I don't think anybody ever trained him to do that. It's just sort of what was
natural
to him. So
did you know how special that was at the time?
Did I realize how special that was?
Yeah, at the time.
I appreciated it at the time. I trying to put myself back in that frame of mind. I definitely appreciated it. I didn't, because I hadn't had enough professional experience up until then. I guess I didn't really realize how unique that is.
Right.
For somebody to take such an interest in their people's lives and to pour into them in those ways. I've later realized that that's both rarer than it should be, and probably
one of your three things that why you hung your new shingle, right? Get into the people. Yep.
That's right. Yeah. So this ends up forming some of my worldview down the line, but I didn't fully appreciate how unique that was at the time. So we got to talking about what I wanted to do with my career, and I frankly didn't know at the time. He told me he had a buddy who was in finance in Cincinnati, offered to make an introduction to him. He was like, you know what? I just read this book that I think you'd find really interesting that's about business. And so gave me copy this thick of Buffett, Making of an American Capitalist. You ever read this book?
Not that one. I read the Snowball one, which is I'll put notes and I'll add that link in the show notes.
Yeah. Amazing book. And I read that, and it I had a lot of takeaways from the book. It was a very sort of impactful on me. And again, I'm in the early days of my formal business education, but just understanding the worldview, the approach, the style, the investing philosophy of arguably the greatest investor that's ever lived, just sort of sparked in me a curiosity to dig into this topic in this world of finance, and private equity was a natural extension of that. So this ends up coming back. This little early anecdote planted in me this seed of interest in this topic, and was one of the things, probably not the only thing, but one of the things that caused me to really lean into this educationally. This book comes back to bear later on when I'm interviewing for a private equity job. And I am interviewing at a firm called Alpine Investors on the West Coast, which I ended up going on to spend 13 or 14 years with. And the guys who were interviewing me at the time, one of their interview questions was, what book have you read recently? What's the most recent book you've read? Or what book was the most impactful on you? And this one came to mind. So I shared a bit of my musings on this book. Little did I know after the fact, this book was like the hot topic
Bible
at this firm.
That's awesome. Nailed it.
For everything I lacked in terms of real qualifications to do this job, this is what I mean when I say dumb. I
That's
sort of
awesome.
walked my way into this job, but for everything I lacked in terms of qualifications, which was some significant gaps, I think I sort of made up for by at least professing an interest in the same book. That's awesome. That had become somewhat of the Bible at this firm.
That's awesome. And what I find fascinating, and I'm excited to pull on this thread because I'll give you some context, Dan, is over the last 10 years, I've really separated in this concept of our intentional growth is ownership, which is the capitalist, right? Is your asset growing in equity value, and what's the trade-offs between distributions and reinvestment versus operations and leadership and operations where people will get W-2 paychecks that are running a company to meet ownership's objectives. Very often that is very conflated in the privately held market. And that's one of the reasons my dad and I ended up selling our business that was doing 20 million with 110 employees, because all that was conflated, solving for annual income K1. And so like when I think about, well, the reason I asked that question from you is like, how will people's mindset get into, hey, what the hell is this thing worth and what's the growth of it? And then how do we run the company? And you have gone from like, when I hear from like the capitalist side into then operations and value creation, which like, I just think there's this very interesting overlap happening in the marketplace where it matters to do both. And you've kind of threaded that needle from what I've seen.
Yeah, and they're not mutually exclusive.
Right.
In every case. Yeah, I have not founded a business in the way that you have, so you're going to have a lot more to say on the topic of how does that really manifest at the early stage. But like you said, I've had the unique luxury of having seen the private equity movie from a few different chairs. I've sourced deals, I've done deals.
Yeah, well, yeah, I was gonna say, why don't you give us a little bit of background into Alpine? Like, what were you doing there? What was your kind of career path there?
Yeah, so I was there for about 13 years, and I played across most of the positions on the field. At the time I joined, for context, we were a small, maybe 7 or 8 professional firm, and joined in 07. I don't know if you knew or not, but there was a massive global recession in 2008. So a very interesting time to be getting exposure to and really immersed in that world.
Especially when the rates went down and like that's really when private equity started the rampage that it is been on for 15 years, right? I mean, did you guys see that coming, or was it more like what ground are we standing on and how is the paradigm shifting?
Yeah, I don't know that we had the foresight at the time. I'm trying to think back. I don't know that we had the foresight to know that what's the old aphorism, never let a good crisis go to waste, sort of thing. We clearly knew we were in the midst of crisis, but our founder at the time, much to his credit, he had the foresight to sort of use that crisis as an opportunity to, because there wasn't a lot of deal making happening. So we have people sitting around. We're very engaged in our portfolio, just trying to keep the thing afloat at that point in time. But we took the time, and this is probably 2009, to take a big giant step back out of the day-to-day, out of the firefighting mode, and say, what do we want to like? What do we want this thing to be?
What was your portfolio made up of at that point, Dan? What kind of companies?
There were probably 12 to 15 companies in the portfolio at that point. These were across a bunch of different sectors, doing some early work in software, some service-based businesses, a few consumer businesses, a gaming business. So really pretty generalist fund.
Interesting. Yeah.
By style. And these were lower mid-market businesses, probably on the low end, 10 million of revenue, on the high end, 150 million of revenue. In all cases, we were the first institutional investors in these businesses, oftentimes either partnering with the founders or bringing in a replacement to the founders.
How long had Alpine been around? Was that the first fund, or did you guys have multiple funds at that point? So
we were on fund 3 at the time that I joined, trying to raise fund 4. Fund 3 was mostly invested, trying to raise fund 4. Clearly
during 2008-9.
Yeah. Yeah. Not the ideal time to be raising a fund. But Graham, our founder, had the foresight to say, let's use this as a chance to kind of codify and solidify what we want to be when we grow up. So we brought in some coaches who did work similar to what I would imagine you do with companies you work with. And they spent a lot of time with us on what's your vision for Alpine? How can you personally connect to that vision? What's your vision for yourself? And how do you get those two things to sort of line up to the extent that they line up? Did a lot of that self work, did a lot of teamwork, and a lot of business sort of vision, strategy, planning work. And the thing that came to light as we did that was, Alpine had spent the first 10 years of its career getting pretty darn good at the deal making part of the private equity equation. Knew how to due diligence a deal, understood how to look for value. Were pretty thoughtful when it came to what do we do with these things once we own them. And so we largely figured out the deal making part of the business. Not to say you don't get benefit from continued pattern recognition and doing more deals, but the real insight that came out of that was the thing that is most correlated with our deal success, our investment success, above all other factors, are the people running it. And where we have been intentional and thoughtful about getting the right people aligned against the right value creation priorities, we tended to be doing better than when we hadn't been intentional, or maybe had been slow to the punch on making certain hiring decisions or firing decisions or the like. So that light bulb went off to say that, what if, people are, this seems a little bit trite and sort of silly to say it this way, but people are important to investment success. And what if we dedicate the next 10 years of this firm's history to getting really good at the people part?
I love it, Dan. And the reason I laugh is because, my partners have been through a PE roll up, and one of the, I think you and I both are mutual friends with Brent Beshore from Permanent Equity. And there's a lot of, kind of, they're becoming more loud out there as far as different takes on private equity and the people first conscious capitalism. But the privately held business owners have always known that. But then all of a sudden, it's so awesome to hear the PE firms. And this is why I said there's this intersection of operations, privately held companies, and capital finally coming together saying we need to do all the right things and treat everybody the right way. But my partners and I always say, when we talk about PE, if you find the wrong partner, you're going to talk about hey, we got to we have constraints or margin compression, whatever it is. And we need to tighten some things up, and they're going to come up with a riff. And we need to lay off X amount of people. And you're going to explain all of so-and-so's been with us. So-and-so's got the best contacts with all the major customers and vendors. And they're going to let you talk. And then they're going to say, yep, we have to do a major riff. And so but at the point of now that things are harder. And I think this is where it's interesting, where people do good work in hard times, is people execute the stuff that ends up on the P&L. So we can't just have this P&L that fictitiously go up and the EBITDA fictitiously go up if we don't have the right people executing the stuff.
Bingo. And I think, any smart, speaking of private equity, any smart MBA that's in private equity understands that people are important. So I don't mean to suggest that this concept is just totally foreign to and unfamiliar to private equity professionals. What I have noticed is that there's a big knowing doing gap out there.
Interesting. Yeah.
Which we can talk about my observations and reflections on private equity at large when it comes to just people, if that's interesting. But I see this shifting. I see this knowing doing gap closing, where more, for a long time, private equity firms have been aware of the fact, and I'm going to paint in probably unfairly broad brushstrokes here, but
it's okay, because, and by the way, if they do not understand that these are broad brush strokes to listeners, then they can go check out our training or something like that. Because we have to speak in generalizations to get some of these topics across.
Right. I think for a long time, everybody understands that people make these businesses tick. What the knowing doing gap comes into play when there's a big chasm to cross, going from an intellectual understanding that, hey, working with good people, treating them right, creating an environment where good people are going to want to stay and give their all, that's important, to actually having the machinery built into your firm, your engagement model with your portfolio companies, the right machinery resident within these companies to drive people power performance. So there's a big gap. And I think that gap is slowly starting to close in private equity, and you see this with more heads of talent being hired at a fund level. You see this just, if you go to private equity conferences, you see this just in terms of the amount with which the frequency with which this topic is talked about.
Yeah.
So I think we're in the midst of a sort of a, dare I say, revolution in the private equity space, where there's more investment in this area, but there's still quite a ways to go.
Love it. Love how you frame that up too. And what's interesting, coming from the privately held sector, Dan, I think it's interesting how these worlds are colliding in what I think is going to be a very productive, good outcome. Because I've said now for 10 years, my dad and I ran a $20 million business off of an income statement. It was a distribution with a couple million in inventory, 115 employees. And the reason, and he was I always joke around, I was a copier sales rep, I got a D in accounting. Now I teach finance. And it's well, why the hell did what I've been trying to wrap my head around, Dan, for 10 years is how in the hell can millions of companies and owners not care about the cash flow statement? And I think it goes back to how we started this conversation. In 2008, we hit the printing press and everything went up for 15 years. So you could literally only look at your income statement, project out your some sales, your cost of goods, your SG&A, and be it's going to be fine. But it's wait a second, distributions, working capital, taxes are kind of important, and I need to pay my payroll every 2 weeks. And now that it's harder, my message fell on deaf ears, man, for 6 years. Of finance, because I went through the hard things because of our family business problems, when everybody else was kind of in this cakewalk time period. And then so I thought, I walked out, I was everybody's gonna want this, and no one was talking about it. But I say it now because people are going, holy crap, I need to understand how finance works if I actually want to grow, because I can't just assume everybody's going to come and it's going to be easy. Everybody meaning customers.
Yeah. Did you see a turning point during COVID around business owners' awareness that, hey, actually managing cash and working capital in these businesses is a thing that I need to?
It's exactly the date that it happened. And I've been doing this for 10 years, Dan. So isn't that an interesting data point? Like, so my company started off as a training business. So I had a 2-day boot camp. We still have it. I digitized it during COVID. So we've had about 700 entrepreneurs go through it. We teach about valuations, value growth, exits, finance.
Nice.
But what happened is in COVID, and it was literally April 2020, people were like, I need help. And that was the first time they went from like just accepting and liking the training to like, what the hell am I supposed to do that? And what about this? And then I think a lot of people were like, I just have a bookkeeper, I have a controller, and I don't have a CFO, and I'm running a $20 million company. And it's not even the CFO services necessarily. It's more of just them understanding working capital distributions, because like interest rates, supply chain issues, like all of the problems, the answers are in the cash flow statement. And like, if you don't tie them all together. And so it was just fascinating, Dan. So to exact your point, I've scaled a multiple $1 million business in the last handful of years because of this problem. And now, I mean, things haven't gotten easier.
Sure. Yeah, it makes total sense that when times were good, fundamentals were strong, and cash was abundant and cheap, this would be less of a point of emphasis for operators.
So
and then when a thing called COVID comes into play that really,
rocks the boat,
that rocks the world,
yeah,
it creates an awareness that, hey, we need to take a more balanced, expansive view of our business.
And so how does that, like, I think about it. So then it's fascinating. Alpine and your firm decided to figure that out that long ago, because you guys could have gone out and just continued to raise money and then find cheap debt and then play the financial engineering game for probably another 5 to 10 years without having to, because I think, again, this problem I think is intersecting both PE firms and privately held businesses, where the fundamentals are really important now.
Yep.
But both sides are realizing that now. And so like, what was that? I just find that fascinating that your firm did that. Was that kind of the owner's take? And then like, what was driving it?
Yeah, I think it was two things. One was, at the time we did some of the, attribution analysis as finance nerds tend to, and we're able to observe a real correlation between making thoughtful, intentional decisions about who we were putting into these portfolio companies and investment returns. So that was one part of it. I think the other part of it was, like many other private equity guys and gals, we understood that the quality of the team was important to investment success. I think what separated Alpine at the time from a lot of firms who also understood that was the commitment to taking action on that. That's one of the things I think has propelled, Alpine's success over time, is the clarity of thought on what in the sort of long-term view around where, like, what is going to be the next horizon in the private equity space and how do we get ahead of that, and a really systematic way of attacking that. So this may get into a whole different conversation around just, an operating system for running your business, which I know is core to what you do. But we established that, hey, we want to get good at the people stuff. So in 10 years from now, we want to be, our goal at the time was to be $1 billion fund 10 years out. And we sort of codified how this people-focused strategy was going to play a role in getting us there. We worked backwards from there and said, okay, this year, because we have an annual goal setting rhythm and a quarterly goal setting rhythm, what's one thing we can do to move 1/10 of the way in that direction? And let's sort of establish some initiatives. Let's put some metrics around those. Let's assign some ownership to those. Let's work backwards from there and say, this quarter, how are we going to move those things forward? And so it was just a real sort of systematic way of attacking that strategy. And so it was very crude at the outset. It was, how do we, I'm trying to think back to 2009, once we sort of established this vision, I think it was probably something like, how do we make smarter hiring decisions by just getting better at interviewing? That was something early days that, which now I think we've, 10 years down the line, they've really cracked the code on.
We got to start somewhere, to your point.
Yes, we had to start somewhere.
Just talking.
The crawl, walk, run thing. What is the crawl? What is the crawl in the direction of this big, expansive, compelling vision? And how do we just get started?
That's awesome.
But to the extent that you have you have an operating rhythm in your business that is causing you to return to every quarter, every year, return to these core tenets of your long-term strategy, and establish goals and attack those goals. That kind of operating system, whether you use the EOS or the Gazelles or any other, sort of operating system of this sort, that is the thing that separates those that have big ideas but never attain them from those that have big ideas and are able to predictably, repeatably achieve them.
And I just think about how that must be rocket fuel for someone in this space that's already driven by finance. Because you know what the biggest problem I see, Dan, is hundreds of thousands of companies are running EOS these days, or Gazelles. I think it's less of that because it's too complicated for a lot of people, or OKRs, whatever it is. It's like there's a lot of people that like that concept of 10-year, 5-year, 3-year, 1 year, 90 days. And people go into these planning meetings and make shit up. And then they make it up. And then there's no financial metrics to any of this stuff. And going back to the cash flow statement, they have zero idea how they can afford any of this stuff and how it provides a return. Or why I think, and this is why I'm so fascinated about having these conversations with people like you, is because we're infusing the investment mindset with operations, and it has to work hand in glove. Otherwise, you have all these privately held companies going in like, we're going to do all these things. They get on the planning meeting like, when are you going to do it? How are you going to afford it? How does that impact your distributions versus your taxes versus, and they have no idea.
Yes.
So
well, I think that therein lies the benefit of having you can apply this same idea to an operating company or a private equity firm. Therein lies the benefit of having people around the table who have finance skills and having people around the table who have operational and strategic skills. And to the extent that all of those are being brought to the party, when it comes, the party being the determination of where are we going, how are we going to get there, what needs to happen this quarter, this year, then I think you put yourself in a really strong position to make sure that you're making thoughtful strategic decisions, you're translating those into operational implications, and the financial implications that those decisions are going to bring.
Right. How were you guys? So what were some of the things that were working? Because I know we want to get to where you ended up taking a leap onto your own and some of the stuff that you're doing with your book and everything like that. But it's very helpful to understand the context. And so what were you seeing that was working on the people side? So what were some of the ahas? And then how were you tracking those actual returns?
Yeah. Well, some of the ahas. So one aha was, as we looked back, and I personally looked back, I was relatively early at the time in my hiring career, but I look back at some of the early hiring decisions that I had made when I was at Alpine and a few before. And I realized that I was actually I knew very little about how to scientifically, thoughtfully, methodically make high quality hiring decisions. And so that look in the mirror moment,
you just made me think about myself and my own choices too.
Well, that look in the mirror moment caused me and us as a firm certainly to realize that, hey, we actually need to get good. If people are everything to investment returns, we need to first and foremost get good at selecting good people. So we spent a lot of time as a firm, and I personally spent a lot of time learning the science and the art of hiring, of assessment, of interviewing. So that was sort of the price of admission to the people game, was learning how to do that well. Then once you can do that a little bit better, the next realization, the next horizon.
Well, before we move on, any thoughts on that? Because everybody listening in is probably going, okay, well, I haven't mastered that because I've hired probably 100 so people, and having beers with them and them being nice is not how you should hire a controller like I did 10 years ago. But I think a lot of people try to figure out so how do you balance the systematic versus the rapport trust building?
Those two things. So this is a little bit of the art of doing it well. So the school of hiring that I was raised in, there's a book called Top Grading. Have you ever heard of the book Top Grading?
No, I like it.
It's I think it was probably written in the 80s or maybe early 90s or something, but it was turned into a book, a much shorter, more digestible book called Who, that was written by Randy Street and Jeff Smart. And I mean, the short answer to your question of how you do that, how do you get better at hiring, is go pay $99 to buy a copy of Who and follow Who.
Got it. Awesome.
Now it takes just cycles and using that methodology and refining it and adapting it to your own business. But that book is a great starting point. To your question on how do you balance being really methodical and rigorous about interviewing while building and maintaining rapport, that's where a bit of the art comes in. I spent, late last week, just a couple of days ago, I spent 5.5 hours with a CEO candidate, taking him through a structured interview process. This is a CEO candidate for a private equity backed business. And on the surface of it, you would say, well, like 5.5 hours, how does any experienced CEO ever want to sign up for that? That's sort of like highly rigorous, in-depth process. And a couple of things I think allow or cause people to lean into that. One is the recognition that if your private equity sponsor is being that thoughtful about interviewing you, and you're the sort of CEO that gets the joke when it comes to the importance of hiring good talent, it probably means that in and of itself is a signal that there's value.
Just saying I agree to do that already passes a threshold that a lot of people probably wouldn't want to.
Totally.
Yeah, makes sense.
In doing so, in having your private equity partner be the recipient of hours and hours of synthesized data on who you are, how you operate, how you roll, it's going to put them in a much better position to make you successful. It's going to accelerate the often painful getting to know you process that occurs in the first 6 months of any sort of new professional relationship. It's just a good thing all the way around, including for the candidate.
Well, it's like I just love that, because it's the same reason I love the long form podcast these days, because like you can't fake being yourself for more than like 90 minutes.
Right.
And like you're going to end up figuring out who they are over that period of time.
Yeah. It's also just like approaching interviewing in a spirit in a mindset of care, with a spirit of curiosity and interest, I think can allow any of the squirreliness or sort of fear factor that can come into play when you're talking about interviewing somebody for 5 hours to quickly dissipate. That's something I think I've gotten really good at. This took a lot of cycles, but I got really good at was just building rapport, building trust in that setting, and using that as the gateway to really understand the balanced 360-degree view of the person.
Yeah, I like it, man. So why did you end up leaving Alpine? Like, what was the reason? Like, why did you start your own thing, and what was the reason for writing the book and everything? And feel free to kind of give everybody like a cliff note of how you got to what you're doing right now.
Yeah. So the short version of what I'm doing right now, I spun out of a full-time role at Alpine in 2021, I think it was, to start my own thing, largely doing a lot of the same things I was doing as a operator or a private equity guy, in a sense that the core of what I'm doing today is helping private equity sponsors and their newly acquired companies to answer 3 questions. One is, where are we going with this thing being a new investment? Call that your vision, call that your BHAG, call that your whatever, but where are we taking this thing? Second is, how are we going to get there? And I think of that as your value creation plan, which is really the basis for this book I wrote. And then the third is, once you answer question 1 and 2, who do we need aboard to make that happen? So all the work I'm doing today ties back to some combination of those 3 questions, mostly with 90% of which is with newly acquired PE-backed companies.
Well, why on your own?
Variety of reasons. I've long had an entrepreneurial itch that I wanted to scratch. And so to take you back a little bit, one of the things I realized towards the end of my time in a fund level role, something felt sort of like discombobulated or just off track about the path that I was on. I loved the people I worked with. I believed in what we were doing. I loved a lot of the elements about the role I was playing. And I can't explain it other than to say that viscerally, sort of deep in my core, I felt like I was sort of on a path that was not the path that was meant for me. And I'm a pretty logical guy. I'm not really super intuitive, but something in my intuition at the time was screaming that, hey, you need to take a step back and pay attention to that signal. So this was during, I think COVID had just set in when I was spinning out of to take you back to the moment, I was spinning out of an operating role with an Alpine portfolio company.
So you had actual operating roles with some of these companies too?
Yeah, had a few of them. Had probably 3 or 4 operating tours of duty. So, my first CEO role in the mid 2010s, played a COO role in different sort of CXO
What kind of companies?
First one was with a gaming business. casino gaming technology business.
Mhm.
Never thought that was never part of my career plan, was to get involved in a casino
That's
technology
awesome.
business, but great learning. Benefits administration business, an educational assessment business, continuing education business.
Oh,
So
cool,
across a
man.
bunch of different
Yeah,
industries.
that's awesome.
But I
So
was
you're just
spinning
getting
out
out.
of, well, I'm sorry.
You were just getting out of one of the roles.
Yeah, so I led the carve out of, together with a team that we brought in, led the carve out of a division of a formerly publicly traded company based in Chicago. My job was to go in and get the thing carved out, get the team stood up, and get the business separated from its former parent. So we did that in 18 months. I transitioned out of there, and I was sort of talking with Alpine and others about what I wanted to do next. And I decided that I'm going to take. This was in like May that I was wrapping up there. I'm going to take the summer off. This is during COVID. Things were weird out there. I was like, I have passed up during different transition points in my career in the past where I'm going into or out of an operating role. I've passed up the chance to take time off.
Mm-hmm.
And for whatever reason, I
Good
just said,
time to take some time off.
I'm going to take the summer off. So I'm sitting there in the summer of 2020, I guess it was. I don't have any super interesting hobbies. I'm a terrible golfer. Like, I'm sitting there day 4 of my summer sabbatical, twiddling my thumbs, gazing at my navel, and just wondering, like, what am I going to do with the summer? So I thought, and I'll tie this back to your question in a second, but I think this may be
I'm
interesting.
tracking. Oh, it's good context.
So one of the things that I had always wanted to do was write a book. And I didn't know at the time that I had anything especially interesting to say, but I committed to that summer, I'm going to take a stab at writing a book. So I was all in, and next I had to figure out, well, what the hell is this book going to be about? So I'm sitting, it's like the proverbial like blinking cursor moment on the screen where I've got my Word document pulled up. It says book in the header. And I'm like, okay, wonder what this thing's going to be about. So I got to thinking back through, I knew I wanted to write something on leadership because that's always been a passion of mine. It's something that I do think I have a thing or two to say on the topic. And I got to thinking about what is one thing. I don't want to put it some dissertation about leadership or some 19-point leadership model out there. The world does not need another one of those.
Right.
What's one actionable, practical thing that has worked for me as a leader that I could pay forward to other leaders? And I got to thinking about, this is not the book Winning Moves. This is another, this is a more recent one that I wrote a couple of years back. But the first book I wrote ended up becoming called The Blue Flame. And it was about this practice that I had used as a manager, as a leader, whereby whenever I had somebody on my team who was either not performing and or disengaged in their role, I learned to call the same play. I would bring them into my office, or in their next one-on-one, I would bring this up and I would say, I would not make it about their performance. I was pretty disciplined about dashboarding and having individual goals and red, yellow, greening those. So everybody knew where everybody stood. So I didn't need to bring them in and beat them up over their goals.
Already objective at that point.
Yeah, I'd bring them in and I say, hey, we both know what the dashboard says, but let's put that aside for a second. And let's go back to talking about you. And let's talk about what you're great at. Let's talk about what energizes you. And let's talk about what brings you a sense of meaning. And inevitably, the answer in why somebody wasn't performing or was disengaged in their role was found in the answer to those 3 questions. They're either doing work that doesn't align with what they're fundamentally good at, they're doing work they don't find energizing, and or they don't see a sense of meaning in their work. So I would, through this sort of coaching conversation with my teammates, I would sit there, I'd draw 3 intersecting lines on the whiteboard. I'd put talents, mark 1 talents, 1 passion, and 1 purpose, which were shorthand for what are you good at, what energizes you, and what brings you a sense of meaning. And I would use just questions and a little bit of coaching skill to draw out of them the answer to those 3 questions. And inevitably, when you did that, myself and my teammate would arrive at the same conclusion, which is, I actually now understand why you're not performing. It's that if you imagine those lines intersecting and wanting everybody on your team to play at the intersection of those 3 lines, the reason why somebody wasn't performing is their dot was off center. So that then opens up a conversation around how can we get your dot back on center by either repurposing your skill set or recrafting your job description to get you playing closer to the things that you're good at, or helping to give you some job assignments that you're going to find more energizing, or in some cases, moving you out of the business to a place where your talent, your purpose, your passion can be applied better. So I bring this up. This is a bit of a detour, but I bring this up relative to what caused me to spin out of private equity role, because as I was sitting there writing this book in the summer of 2020, I realized I now know why I was feeling discombobulated. My dot was off center. I had drifted from the work that best aligns with what I can do best, what most energizes me, and what gives me a sense of meaning. And so as I'm writing this book in parallel, I'm thinking about how can I create a
When did you realize, Dan, that you're like, oh, damn it. It's me.
yeah.
It's like I'm writing this about everybody else. And then like I look in the mirror, like when did that epiphany happen?
Somewhere along writing the book, because in parallel, remember, I'm on a summer sabbatical. I give myself 3 months to take off, and I get sort of antsy if I don't know what the next chapter is going to be. So in parallel with writing this book, I'm trying to figure out, well, what am I going to do after this? Am I going to go back to a fund level role? Am I going to stay in an operating role? What am I going to do?
Pardon the brief interruption. Just a word about how Arcona, my team, can help. If you're interested in running your company like a financial asset, there are 2 ways that we could help you do what Dan and I are talking about running the company like a financial asset. The first one is if you want training and coaching about how to get the right mindset and get clear on your goals, how to identify your target valuation, and how to de-risk your cash flow, we have a 2-month training and coaching program. Or the second way we can help is if you actually want a financial dashboard where we build out your financial dashboard that's custom to you and your company and your goals, and it comes with a couple coaching calls each month. Those 2 offerings all start with a discovery call with me. All you have to do is go into the show notes, use the link below, schedule a discovery call. We can talk through whether you want more coaching and training first to get your head wrapped around this concept and where you want to go and where you're at right now, or 2, if you want to jump right in and get a complimentary financial assessment from my team at Arcona, where we plug in the dashboard, analyze your numbers, and come back with some thoughts. Both of those offerings start out with a discovery call in the show notes below. But at the end of the day, you got to understand how to create that sustainable cash flow if you want to get the target equity valuation that you want at a point in time, so you can have a lot of fun, make a lot of money, and make the entire journey worth it. So thanks everybody for listening in, and I hope you enjoy the rest of the conversation with Dan.
So it was really alongside writing this that this started to just become more apparent to me. So I felt a little disingenuous at the time, like this was an eat your own dog food sort of moment. Like I'm writing about this thing, and I'm professing that this idea of the blue flame was what I call the concept, holds the keys to getting people lit up in their careers. And I'm now realizing about myself, like I'm not lit up. And so this happened, writing this book. The moral of the story is writing this book happened at a very fortuitous, if you believe in sort of higher powers at play, happened at a very important time for me and caused me to look in the mirror and say, how can I create a world in which a career in which I can spend 100% of my time, or darn close to it, operating in a way that's consistent with my blue flame, what I can do best, what most energizes me, and what brings me a sense of.
You know what I love about what you just laid out there? When I say part of intentional growth, there are 3 things that every business owner wants: to have fun, create wealth, and make an impact. And it's living in the intersection of those 3, Dan. And when they get off balance, then people have a uncomfortable feeling. And and what I've realized too is, after all the work that I've been doing on that, is it's tied very much. It's just a fundamental first principle of human behavior. Because like it's ichigaji, if that's how you pronounce it. Are you familiar with that Japanese term? And then like I was listening to Sam Harris and Jordan Peterson have one of more recent interviews, and Sam Harris said, and I just loved how he worded it. He said, I want to have this least amount of distance between doing what I love and doing what I have to. And I was like, oh, and it's like all these different ways of like, how I wrap it together too is while making the income that I want and freedom over my time while growing wealth. So it's like living in that space. And like, it's interesting for me, like as you explain that, what do you think about the business owners that you've bought out and how they deal with this situation? Because that's essentially the problem that I've gone on a mission to solve, is that people have it all conflated, Dan, of their identity and those 3 things that you're talking about. Their blue flame oftentimes is their company, or it might have gone out because they're sick of the operations, but they still want the wealth, but they don't know how to separate all this shit. So then they make rash decisions. And then they sit there with that proverbial cursor blinking with no purpose anymore and no job. And they're going, huh, what did I just do? Have you seen that in like now if you look back at your past or what you're currently working in, like how this situation comes into factor, not only with the key executive team, but also the person that founded the business?
Yeah, I had never thought about this question, this sort of idea of the blue flame, vis-a-vis the business owners I've worked with in the past. But as you're saying that, a few faces are popping into my mind where for some business owners, for some founders, I can imagine that, especially as you hit new ceilings of complexity in your business, where it may call on new skills that or new ways of operating
A
that just
CEO
aren't core
instead of
to
you or something.
aren't core to your area of greatest impact, aren't core to your don't really align with your core talents, and that can feel discombobulating, using the word I was using earlier. I'm thinking about one founder that we bought out who, before we did the deal, we were sort of underwriting the deal based on, in part, on the idea that this guy was important to the business, and he was part of what had made this business really successful, as is often the case with founders.
Mhm.
And so, key man risk was something that we were both mindful of, but also had convinced ourselves wasn't actually a significant risk, because he said all the right things. I'm committed to this business. I love this business. Blah blah blah.
Mhm.
Well, when the deal closed and the wires cleared, is when we as a firm really started to engage in, well, okay, you got in the business to, I think it was 10 or 12 million in revenue at the time. The conversation is now about what does it look like to get it to 30? And as we started to engage in that discussion with the guy we were backing, it became clear, certainly to him and a little bit later on to us, that some of the things that he would have to engage in his own ways of operating, some of the things that he would have to learn, new skills he would have to develop, weren't actually consistent with what energized him and
His
what
blue
he was
flame.
fundamentally good at.
Yeah.
So he pretty
Interesting.
quickly checked out and stopped showing up for work, both proverbially in early on, and then literally down the line.
Literally physically, yeah.
And I don't think that was because prior to closing he was being disingenuous by saying that
Very
he
interesting takeaway.
was
Yeah.
committed to this business. I assume best intention. I have to imagine, based on the information he had at the time, he was in it to win it. But as the gap between his blue flame and the needs of the business started to grow post closing, I think he started to realize that, hey, this isn't what I wanted to be doing.
Fascinating. So what was your blue flame then? Like, what did you realize was misaligned, and then how are you satisfying it now?
A big part of it was, you asked the question of what caused me to go do my own entrepreneurial thing. A big part of my blue flame, which had been extinguished to varying degrees in different times in private equity, was creativity. As I was researching this, I did a lot of research for the book, The Blue Flame, into the human psychology of how do skills get built, and what is the impact between meaning and motivation.
Me Guy Can Checks Me High. Did you pick up his book?
Oh yeah,
Flow?
I had to spell his name in the book, which
yeah,
through my spell checker for a little. But what I realized was that where was I going with this?
The creativity was not.
Creativity. Yeah, thank you. So what I realized is that a lot of the way that we are today as people takes root in early childhood experience. And so if you want to know what is really core to you today, go back and start as early as childhood and march your way towards present, and just think about, what are the high points in my life? What have been the low points in my life? What have been the themes that have bound the high points? And it's in that sort of self-discovery process that you can start to get clear on, what do I really value? What am I really good at? What brings me a sense of energy? So as I did that work on myself, I realized that some of the highest of high points in my life have been incredibly creative. I think about the deep sense of joy and satisfaction I got when I was like 6 years old, sitting there for hours on end with one of those pieces of graph paper in front of me, building houses, like full floor plans for multi-level
That's awesome.
houses.
Yeah.
That was creative. It was creating something from nothing. I think about later on in life, when I was in college, I've always been a musician, but I played my way through college, made my rent money and my beer money by playing in bars and clubs on the weekends, playing music.
What'd you play?
I'm sorry?
What'd you play?
Guitar is my first instrument, but I've played some bass, play piano.
Nice. That's awesome, man.
the utility player, not really good at anything, but
You can play, man. It's a lot better than
hack
yeah, I
a
have
few things.
a huge respect for music because I can't do any of it. It's like a completely foreign
Yeah.
language to me.
Yeah, but like some of the highest of high points in my life have been being on stage. When I say on stage, this is in front of a crowd of dozens of people, vast crowd of dozens of people in these old musty bars, just making music with people, creating from nothing. So that awareness, there were other realizations I have about things that are core to me that had sort of drifted away from in my career. But that was a big one. Was what would it look like to have more creative liberty to build something period.
Mm-hmm. Mm-hmm. That's
And
awesome. Do you is yeah, I'm excited to dive into your Winning Moves book too. Is like, but I think about this 5 hour interview that you're having with this executive. Is that kind of really core and fundamental? Is like what you're trying to do is find out how they're managing their blue flame and how the alignment happens with their blue flame and the role and responsibility that it's in front of them.
it very closely related. Like if you believe that the core principle of the blue flame was put people in a position that aligns with the key to unlocking people powered for performance in your company is put people in a position that aligns with the answer to those three questions.
I love it.
What are you good at? What energizes you? What brings you a sense of meaning? And so to your point, these deep dive interviews are about extracting from somebody's life history and career history the raw material you need to understand yourself and help them understand, what am I great at? What energizes me? And to what degree do the answer to those questions actually align with the needs of this role?
That's awesome. It's so like now that you're doing it, well, let's. By the way, I gotta say, did you see that thumbs up go up?
Yeah.
You have a Mac, obviously, because did you know that the emojis happen in your OS?
Oh,
So yeah, go like this. I get like
oh, nice.
I gotta love it. So the people that are listening in with the new OS, I've done it a couple times, Dan. I had to go in and turn off the emojis. Oh, that's awesome.
That's fantastic.
Yeah, if you do a heart, a bunch of go like this with your,
I was wondering where that came from.
Yeah.
Oh,
that's
man.
awesome.
You
okay, we're gonna leave that in there just because it's too awesome.
I'm going to abuse that feature now. You should not have told me that.
Oh, that's too funny. This is the double thumbs up is fireworks. Okay. Oh, that's too good. So when I think about because I want to get the take on the Winning Moves, why you wrote that book, and this value creation theme that you're beating this drum on, and the people part of this for private equity. And so, like, and given the fact that we've probably got about 15, 20 minutes left before we wrap up, I like however we want to navigate this next section of the conversation, because I think it's what I think the listeners value is like the perspective that PE firms have, or like what I think is that people appreciate about what I do is that like there's like a meta level like view of a lot of things going on.
Yeah.
So I think there's a lot of trends changing, different forms of capital, different intents of like one of the things that our listeners tune into is like, okay, so great, I want to sell my company or part of my company, or I want to create value. I want to take a playbook out of private equity to apply those things to create some value for myself, then pass it on. So it's essentially like we're all trying to read the same playbook.
Sure.
And so how did you go from the blue flame to the Winning Moves, and then also like what you're doing now? I don't know how you want to start this conversation, but I think you've got a lot of value that you could provide here.
Maybe I'll tell you a little bit about the book just as a door opener to this, and then we can, help you figure out what would be most useful for your audience. But basically, the core idea of the book is the purpose of the book is to help private equity investors, help their portfolio company leaders to make value creation happen in their companies more predictably, more consistently, more reliably. And value creation, I don't know if the word value creation means as much to founders as it does to private equity. It's sort of an overused private equity.
Okay. I know. I got to add to, because say those 3 words again, because I'm going to tell you my 3. This is so awesome. Like we literally are coming at this
Speaking the same
completely. Yeah. So what are the 3 things that you said?
Oh, no, I have to remember them. You said consistently, predictably, reliably create value in your.
So the drum that I beat of intentional growth, Dan, is you have to grow the intrinsic financial value of your company by creating sustainable, predictable, transferable cash flow. And it's like what I want everybody to do is like, I don't give a crap if you're planning on selling or not. Come up with a target normalized EBITDA at a point in time, reverse engineer everything, and then create the target equity valuation by increasing cash flow, de-risking cash flow, and paying down debt, target to that target equity valuation, and then between point A and point B, create sustainable, predictable, transferable cash flow.
Boom.
So that's like probably like breathing oxygen for the private equity world. And actually, a lot of that was from a bunch of PE firms that did some panels with me. And I'm just trying to inject that into the business owner's mindset. But like you're then like spinning around and doing it to the same thing from the people that have been breathing the finances, and you're trying to insert it in with the people part. I just absolutely love it, man.
Well, I love it. I love the way you think about that, and I love the way you've sort of adapted the same idea for the founder audience. And to your point, like it's all the same stuff. The objectives may be a little different, whether you're maximizing for cash flow or lifestyle or exit value. The objectives might be a little different, but I think the common universal theme that unites the way you describe it and the way that I preach it in this book is, I'll go back to those same 3 questions I had shared earlier that really guide a lot of the work I do today. Where do you want to take this thing? I call that I'm getting a thumbs up emoji again.
I'm just going to keep leaving. I love it.
It's great affirmation. I need it. My fragile ego needs it. Where are you trying to take this thing? Which I call your vision. Other people call your vision too, but I call your vision. And then once you know the answer to that question, it really becomes an exercise, to your point, in reverse engineering that outcome.
Mm-hmm.
And 90% of the book is geared towards providing the quote unquote winning moves that operators, whether you're a founder or whether you're a private equity operator, operators can use to drive each of the drivers that propel a business from where they are today to where they're trying to go.
And as you keep going too, Dan, like what I've been trying to explain to my listeners and everybody that goes to our boot camp or online academy is like, you are private equity, right? You just like you own an asset, unless you literally just want a job with a bunch of assistants. Like if your goal is to create an asset, you are actually in private equity. So the same strategies apply. You're just doing it for your own capital.
Totally. Well, in the same way that I think private equity can learn a lot from entrepreneurs about a lot of things, not the least of which is how to stay nimble and agile. And I think entrepreneurs can learn a lot from private equity in terms of how do you take a more disciplined approach to quote unquote value creation. Even though value creation is a private equity word, it means the same. Grow
asset value.
How do you grow equity value? If you're, I don't care if you're a founder, a business owner, a bootstrapper, or a private equity, we're all after the same thing. Part of which is to grow the equity value of your business. So even though this book is geared towards a private equity audience, because that is the audience that I most serve, and that's the world I know, most of the principles, if not all, are as applicable to a founder.
Yeah, I would say, like, I mean, is this safe to say that like your clientele are people that have funds and then are working with, CEOs and operators and stuff like that? But like I find it where like the listeners and our people that go to our boot camps, like they want to consume all of the material. Like that's why they love the Adam Coffey podcast interviews or the Nick Bradleys or the Brent B. Shores, is because, like, to your point, the thing that's majorly different, I would say, if I were to pinpoint like one major thing that's the difference, is like even if someone shifts their mindset. So let's say they go through our material and they're like, okay, now I do want to target normalized EBITDA, target equity valuation. This is what I'm going to do. At the end of the day, like end of the week, they're like, you know what? I don't want to fire my GM because that sounds like it's going to be a pain in the ass. I'm going to have to deal with all that crap. And then, you know what? I have to like then find another person. I might not be able to hire that right person. And I think I'm just going to go to the cabin. Like, you don't have to do any of that stuff. We're like in private equity, like you got an IRR and a timeline, man. So I think when you say insert the discipline, that's essentially what we end up doing with our clients that have our coaching dashboard. It's like we're inserting that discipline. Like you said that this is your goal and we're going to hold you accountable to your goal. But then all of the strategies are the exact same. Yeah. So what is so in the winning moves, like how do you like, in order to create that value creation, like what are some of the core fundamentals? I mean, obviously there's people, but how are you, when you say, because you can reverse engineer the financial statement. So what are some of the operational things that you tend to focus on?
Well, the first thing I try to do in the book is the language value creation gets talked about a lot in private equity land nowadays, and for good reason. Maybe I'll just give you the short the quick view of what's going on out there in the PE landscape, which should be relevant to your business owner audience.
Oh, they're going to care a lot. Yeah.
To the extent that they ultimately want to sell to private equity. So here's the skinny. Tons of capital out there, tons of private equity firms, not enough deals to deploy that capital into. Again, I'm painting in broad brushstrokes here, but you take a 15-year view of this industry, which I have from my starting point in 07, 15 plus year view. There are tons more firms, tons more capital out there, and all of those firms have the same issue, which is we need to find high quality places to deploy that money.
Well, and can I add to that, Dan? Because this is I just love how you and I are like we're in like different. This is the multiverse, man. Is I bring up the Census Bureau every single time I do a boot camp or the academy. And I say there are 6 million privately held entities that have 120 employees, and out of the 6 million entities that have employees, only 21,000 are above 100 million in revenue. Between 5 million and 100 million, there's only 300,000. 5.6 million are underneath 5 million. And if there's 1.5 trillion raised in PE firm coffers, and the reason it's raised is because there was 0% interest rates and no returns for 15 years. And if I say, okay, well, you take $1.5 trillion, let's say you have a 20% down, they can buy the whole damn market over twice with debt. And I'm going like, there's only 20,000 companies over 100 million in revenue. So I go like, well, no shit. And multiples on veterinarian clinics are 28. I had a guy say, I got a 28. I'm like, did you invent horse cancer? The cure for horse cancer? Like, what the hell? Like, but the reason I know this stuff, Dan, is I can't wrap my head around it. And I had to learn the context of it. So you go, all that money was raised because, pension funds went from 8% exposure to 35% exposure over the last 9 years. Wow. So like all these firms were able to raise the money, and now they're chasing. So like to your point, I can't even, what I've said, and the reason I've stayed in my lane for 10 years is I'm going, if I raised the money, I don't know what the hell I'd do, because I don't want to go overpay for these companies.
Yep.
Sorry, you can tell I get passionate about it, but I find that so fascinating because like the people going to buy these deals are going to have to do things for their investors.
And I think that's the core point. That's the why behind the book. Is gone are the days of being able to cost cut, value buy, and financially engineer your way to alpha or outperformance. The inefficiency, again, there's still pockets of inefficiency, and there's probably some counter arguments to this, but I think by and large, the inefficiency has been sucked out of that market by way of just tons of capital, tons of firms, lots of competition. Mm-hmm. And so this market backdrop has brought to the fore the importance of quote unquote value creation, which I define in its most simplistic terms as things that create equity value. But private equity uses the term, I think, a little differently to really represent taking a proactive approach to making these businesses more valuable than when you bought them, such that you don't have to rely strictly on the rising tide of multiples or financial engineering to make your returns. And so the book, my thesis at the time that I wrote the book was, this is going to become value creation. The importance of it, the investment in it, is going to become greater and greater in this era of private equity. And so somebody needs to advance a point of view that is private equity tailored on how can firms go about that. Mm-hmm. And so to answer your question more directly of like, how do you even dip your toe into that topic? The first thing I do in the book, after I paint this sort of picture of why this is important, is take this broad, vague idea of value creation and break it down into its component parts such that we can approach it more surgically. So when you talk, if you define value creation as things that create equity value, it turns out there's like, in a private equity business at least, there's like 5 ways to create equity value. You can grow your revenue and expand your margins. You can do strategic acquisitions. You can pay down your debt, and you can expand your multiple when you go to sell it. 5 things. Dude. It's like 5 things. So knowing that in and of itself isn't good for anything, because it doesn't tell you how to actually go about creating value. But the first stop on the value creation, train is to actually define what are we talking about on value creation, and how do you break it down into its component parts. What I've then done in the book, which is, 80% of the pages in the book are dedicated to proven, actionable, winning moves, the name of the book, that private equity investors, private equity operators, and founders, to your point, founders alike, can use to make to drive those 5 drivers and make equity value creation happen.
It's it brings me it's such a good feeling, Dan, because like I've wanted for so long, I wanted the fundamentals to matter. You know what I mean? And it sounds like that's kind of what you've seen over the years too, where like instead of just moving numbers around and extracting value from a system, like let's go create value. Because at the end of the day, creating value means we have happier customers that have valuable goods and services. I don't know if you've ever come across this book called Makers and Takers.
Mm-mm.
Oh, dude. It's Rana. It's there's the oh, look at this picture of the cover.
Oh
It's,
man, love
so
that.
there's a people
Love
that
that.
are listening in. There's a picture of a hand taking money out, like a Hoover vacuum, versus the makers. The makers are the people that actually make the value. Like we have I always say to everybody in our boot camps, like because I've been knocking the people that have raised insane amounts of money over the last 6 years, and like it's like, yeah, you need to make some cash flow at some point. It's like this is ridiculous.
Minor detail.
Minor detail. Like I said, I don't know about you, but I have to generate enough revenue, have the right margins to then pay my payroll, pay my taxes, and keep funding the company. And so like I think it's just nice to know, and I think hopefully what this will be doing, especially as your people like you are attacking and helping the private equity world, there's I think that's more market efficiency, Dan, because like the people that I work with a lot of times, they do want to take chips off the table. They do want to partner. They do want to sell their business and evolve over time, but they have this misalignment with someone that wants to financially engineer what they created for 20 years. And then they know in their heart, like that doesn't seem right. And
Yeah.
I tend to agree with them. And so like I think what you're doing is very helpful on that side of the fence.
Well, and in the founder world, I know even to this, like the private equity space has evolved considerably even since I got. But private equity's been around in its earliest form since the 1950s or 60s. The industry really started to
Kings of Capital. You ever read that book?
Oh yeah, yeah. The industry really started, depending on when you timestamp it, maybe the 80s, 90s. But private equity has evolved a lot over even the 15 years I've been involved, where I know it still has this stink to it, in that private equity firms are just in it to cut cost and suck the resources out of these businesses. For some firms, I think that's probably still core to their thesis and approach. For others, I know I work with a good number of firms. I know a lot of firms, and there's a lot of people out there who are endeavoring to be makers, not just takers.
Mm-hmm. I love it.
And so I think for founders that are who are thinking ahead to what do I do with my business, what's my exit strategy, but are still leery about private equity as an asset class or a potential buyer because of that stink that has long existed, I would just say, there's lots of good actors in the space. There's lots of firms that are sincerely interested in how do we take businesses that founders have built and preserve their legacy and enhance their legacy and build them further in the right way. Alpine was one of those. I'm proud of the fact that whether we got it right or wrong every time, proud of the fact that the mindset we took into investing.
You were trying. Your intent was good. It sounds like.
Yeah, and you got to make tough decisions at some point along the way, but the intent was always good, which is how do we build enduring businesses. Mm-hmm. So I say that because I would just like for founders in your audience who are considering the idea of one day selling to private equity, just know that there's lots of value creation as a point of emphasis for private equity is becoming a bigger and bigger thing. And that means your business will be made better and stronger under private equity ownership. And this book, I think this is not a way of hawking books, which are going to earn me like a $2.50 royalty for each one.
But this is spread the word, man.
Yeah. I'm making dozens of dollars off these books right now. But I mean this when I say I wrote this book in part for founders who one day want to sell to private equity so that they can understand how private equity thinks about value creation, pre-position their business, use the principles in this book to actually grow equity value under their ownership, but also position their business in a way that is going to jive with how private equity, the types of assets and businesses private equity want to buy, and how they think about growing and creating value.
I love it, Dan. And like I said, I think what you're doing is not only a noble cause, but it's super important. And like, I think like what we're both doing is we're creating a more efficient market, because if people create more value, then like everybody can win. And like I'm also trying to help eliminate some of the stink too, because like I also believe that like the people listening in that don't understand deal structures or like how all of the game is played, it's like you're playing checkers when everybody else is playing chess. And like we can't have people be upset when something happens when they chose not to understand the game that they were playing. You know what I mean? So there's a little bit of responsibility that everybody that I like. I mean, I take full responsibility of what we sold, and it was a mess. That sucked. It was an asset sale on a 8-figure deal, and we paid 53% in taxes, and I mean, I go on and on and on, and it's like I was pissed for a long time, and then it's like, well, I found out I was playing the wrong game. Like, wouldn't it be? So my point is I think that helps both sides meet, because like at the end of the day, Dan, that's kind of like when we're talking about your blue flame is like, I want a buyer and a seller to go at a deal table and talk about whether they are actually aligned on one of your first things. Where are we going? How are we going to get there? And then all the mechanics become, let the deal team do the mechanics, and let the people get aligned first.
Such a good point. Such a good point.
How are you? So like, as we're wrapping up here, is like you're give everybody a little bit of an overview of what you're doing, because I know there's also some investors and PE firms and acquisition entrepreneurs that listen in too. So what's your setup for how you help people?
Yeah, I mean, the banner under which I built this thing is helping private equity firms and their portfolio companies to drive people-powered value creation in their companies. So that's sort of I'm not much of a sloganeer, but that encapsulates a lot of what I'm doing, in a sense that a lot of the work I do tends to track the deal cycle. So pre-closing, I'll get involved with private equity firms that are acquiring companies, helping them to do organizational due diligence, which is really about
Awesome.
how do you, the sponsor, the private equity firm is underwriting the deal to a certain thesis. How well positioned is the business from a leadership, a talent, a cultural, and a capability standpoint to actually make that thesis come true? So that's a lot of the work I'm doing pre-closing. That then translates into the work I will often stick around to support these firms with post-closing, which is once the business has been acquired, it's helping everybody being the board, the private equity group, and the management team to get on the same page about the answer to these 3 questions. With the goal being that, hey, within the first 100 days post-investment, everybody has stacked hands on the vision that we're pursuing, the value creation plan that guides how we're going to pursue that vision, and the people plan, which dictates who do we need aboard to make that happen.
So awesome, man. Yeah, I gotta ask you, like, and this has been a personal thing of like, why is it so many people don't know where they're going? I can't wrap my head around it, man.
What's your hypothesis?
I have no idea. It's been this thing for me for like ever, man. As a kid, I just always figured out, I just figured everybody had it all figured out, man. I was a terrible student, and I always figured people had this, grand vision and clear idea. And like, it is like one of the biggest takeaways of our boot camp and online materials. Like, yeah, I just got to figure out where I'm going. I'm just like, what? Like, I mean, now I know it's a thing, but like, I don't know. So I'm not directly answering your question, because that's why I asked you. I'm like,
it's my guess is, and I'm projecting a little bit of my own stuff onto you in this conversation right now, but my guess is it's because that idea of being intentional, no pun intended, about where you're going probably just seems second nature to you. It seems second nature to me. That's always how I've lived my life. Intentional is a word, and I haven't always done a good job of this, but I think the people that know me best would probably describe me as being quite intentional about a lot of things, for good or bad. I mean, both asset and liability. But the idea of like getting clear on where you're trying to go and then working backwards from there. It's just how my brain is wired, and probably how your brain is wired too.
I can't do anything other than that.
Yeah.
Like there is no other alternative.
So for a long time, I wondered the same thing, which is when I'm engaging in a conversation with a portfolio company or a target acquisition around the vision, sometimes you'll get sort of blank stares. And at first I admittedly looked on that with a lot of judgment. But then I realized two things. Number one, my brain is just sort of wired in that way, and not everybody has the same brain wiring as me. Again, for good or for bad. Or
agreed. Yeah.
Both and number two, the real name of the game is like, how do you bring some of that there backward? I call that there backwards thinking into a world that tends to, and into companies that tend to approach things here forward, recognizing that there's great benefit to having both of those things married up.
Wow,
I'm,
well
I'm
said,
less of a
man.
here, I'm less of a here forward thinker, but I've learned over time, and I think I've sort of modulated and found a good happy medium of being able to preserve what is good about being long-term focused and intentional and goal-oriented and vision-oriented with a real ability to think about what's the next 10 yards we have to really nail. And how do I not necessarily need to know the answer to the question of where am I going long term, but how can I just get after what I think is the right next 10 yards, what my instinct is telling me is the right next 10 yards, and then sort of pick my head up and reevaluate. I think there's benefit to both of those styles.
Dude, so good. That was so good. That was very helpful for me, man, because I probably I accidentally have it become I mean, it's a liability, and like you said, it can show up in weird ways of judgment, resentment, confusion, all that stuff. But it's that it's both. It's meeting them in the middle, just like you also said that there's another big takeaway of the doing and the knowing gap.
Yeah.
Dan, this has been a blast, man. I know we're running short on time, but we'll maybe have to do this again, man. I really, really enjoyed it. Where can people find you?
Link up with me on LinkedIn. I put a lot of stuff up on there, pretty actively traffic LinkedIn. So link up with me there. And that's where I do most of my stuff.
And we'll put all the link to the book and everything in the show notes. Dan,
Thanks so much for the conversation, man. I've really enjoyed it. And I've learned a handful of things that I've see my note page here, things I'm taking away from this conversation. So thank you. And kudos to you for the work that you're doing in the world. I think it's really, really cool and inspiring.